All right, let's check in on Nvidia. It's actually moving higher this morning, gaining about 3.5%, recouping some of the losses that we've seen over the prior couple of trading days. The stock actually falling 7% yesterday, 13% overall from when after it briefly became the world's most valuable company earlier last week. So for more on this and where we head from here, we want to bring in Dan Flax, who's Neuberger Berman Senior Research Analyst. Dan, it's great to talk to you. So when you take a look at some of the price action that we've seen surrounding Nvidia, lots of questions about whether or not maybe this is a start of some unraveling when it comes to the AI trade. But here we are today looking at gains 40 minutes into the trading day. What does that signal to you?
Good morning. I think Nvidia remains attractive with a 12 to 24 month horizon. Clearly in the near term, I would expect the stock to remain volatile. The key longer term, though, is really this continued execution on their product cycles. You saw that with Hopper in the data center, Blackwell announcing Rubin for 2026. And so this execution on the product roadmap is really foundational to driving growth over the next couple of years. And the other important piece of the equation is really a vibrant ecosystem. They continue to attract developers who want to write and invest in the NVIDIA platform. And so we continue to like the name, but again, do expect it to remain volatile in the near term.
So if you're expecting it to be volatile in the near term, what kind of math and models should analysts, investors be looking at to suss out the degree of NVIDIA's success heading into the next quarterly earnings print here? Because I think there is a lot of confusion from the street about how to run the numbers on a company that is growing so quickly.
There are a number of factors when we model the company. We go through each one of their businesses. The most important one is the data center business, where you're seeing very, very strong demand for their systems. Also, on the networking side, growth is very, very healthy there as well. And so you're trying to balance healthy demand with, of course, supply, which is constrained. Now, I expect the supply chain, NVIDIA and its partners, to continue to make progress on improving supply over the next several quarters. But that is a gating factor when thinking about the July quarter results, which will get announced later or in August. But the key is, if they're able to continue to execute on the product roadmap, I think estimates will move higher over the next 12 to 18 months, and that can help support the stock and drive out performance.
Dan, what does this tell you? Does this tell you anything just about that broader AI trade, some of the excitement, euphoria that had certainly swept the markets here over the last couple of quarters? Has that narrative changed at all? Clearly, there's still reason, obviously, to be excited, but in terms of the leadership and who exactly is positioned best, has that at all changed?
The environment remains very fluid, but what we focus on is companies that have distinct intellectual property, ability to execute on product roadmaps, and really the ability to invest throughout what, of course, remains a very, very difficult period. NVIDIA, I think, remains very well positioned in the data center. In the mobile market, think about all the devices, cars, smartphones, of course, factories, all of these different environments, they require low power solutions. So a company like Qualcomm, as an example, is incredibly well positioned in terms of its intellectual property and product roadmaps. I think Apple has a very important role to play. We saw recently Apple Intelligence. I think they are setting up for an attractive product cycle ramp with iPhone 16 and iPhone 17. Microsoft in the data center, as well as Amazon Web Services, Google Cloud. These platforms are really about empowering other companies and individuals to be successful. And that's what we're focused on when we look for growth opportunities.
Well, speaking of growth opportunities, I know there's a theory from your house, Dan, that hardware is going to outperform software because creating software is going to become really cheap with AI as a tool in that space. If that does become true, what happens to the software trade, not in the next 6 months, but 10 years from now?
Software companies, and Microsoft's a very good example. Oracle's another good example. The software companies have to continue to innovate, to invest, to really help their customers transition into the cloud and leverage new tools and capabilities like generative AI to create value on top of what they're already doing. we're seeing early signs that companies like Microsoft with Copilot are doing just that. And so I think there's a very attractive growth opportunity in select software names. I do think the economy and some of the slower enterprise spending is having an impact. But the structural growth story in the cloud and the build out of artificial intelligence on top of that over the next several years, I think it remains intact.
Dan, let's talk about what is going on more broadly speaking within the space. Another regulatory crackdown here today, or back in the spotlight. You just mentioned Microsoft. Today we have the EU filing antitrust charges against a tech giant over its Teams bundling. My question to you is, the market doesn't seem to be too worried about this. Investors have seemed to brush off some of these concerns within the past. Does this signal, though, something a bit more worrisome or riskier here for investors down the line?
I think the EU discussions and engagement with Microsoft, with Apple, really with all of the technology platforms will continue. I think at times it will remain an overhang in a particular stock or the broader sector. The more important thing from my viewpoint is that these companies, while engaging with the regulators, they have to be a little bit more transparent in terms of how their businesses work, how their business models are evolving. At the same time, they have to innovate and they have to invest because the technology landscape is changing so quickly. So I continue to think Microsoft is attractive. They'll have to navigate the dynamics with the EU and other regulatory bodies. But that in my view, is a part of what all the platforms have to do. Navigate and engage while continuing to invest to drive growth.
All right, Daniel, we're going to have to leave it there. Thanks so much for joining us. That was Daniel Flax. He's a senior research analyst. Thanks so much.